Investing, a beginner's guide. Here it is, that thrilling and insightful guide to investing for beginners that you've been dreaming about finding all your life. Well, perhaps we'll leave thrilling to your judgment. However, we are quite confident that you'll become more than just a little excited when you learn the truth about the wide array of opportunities available to you through investing. Opportunities you can use to establish and grow your fortune. This guide is designed to serve as an informational primer for you in the arena of investing, even if you're a complete novice. It's not a detailed guide to a specific investment. We'll be offering those in subsequent publications, but rather a broad overview of different types of asset classes that you may wish to consider investing in, along with guidance on exactly how to get started making lots of money through investing. We're also going to cover some basic principles of investing for beginners. Principles that apply to any type of investment. Learning these principles will significantly help you to maximize your investing success and profitability. To jumpstart your investing, check out our free finance classes online. Introduction to Investing for Beginners. Before we get going with investing for beginners in earnest, a gentle suggestion: relax. The field of investing is a large one, and there's virtually an infinite amount of things to learn about investments. The best, most successful investors will tell you that they are continually learning and continually honing and expanding their skills at making money in the financial markets. You can't learn everything there is to know about investing, or even just investing for beginners, in one day, but fortunately, you don't need to do that in order to begin a career as a successful, profitable investor. One of the most glaring holes in our educational system is the lack of even basic education in the areas of personal finance and investing. One of the most successful traders in history once remarked, "If I'd only been taught in high school what I later managed to learn on my own about investing, I likely could have retired wealthy by age 35. Perhaps that's a somewhat optimistic in hindsight estimate of investing success, but there's no doubt that anyone can potentially reap massive financial benefits from simply taking the time to learn the basics about investing as early as possible in life. So be thankful if you're reading this guide at age 16, but don't be discouraged if you're already well past high school age or even middle age. It's not too late to begin building a fortune through investing, and the sooner you start, the sooner you'll move well beyond investing for beginners and achieve your financial dreams. There are two truths we'd like to stress to you at this point. One is the fact that taking the time to acquire even a very rudimentary knowledge of investing, whether at 16 or 60, will put you well ahead of your peers in terms of financial literacy, and ultimately, in terms of financial success. The second truth comes from one of the richest commodity futures traders. This wise, older man confided an important secret about investing in wealth. You can make a lot more money a lot faster by sending your money to work for you every day, rather than just sending yourself to work every day. And that's all investing is, putting your money to work for you, making more money. To jumpstart your investing, check out our free finance classes online. Basic types of investing. This is the building block of investing for beginners. There's an endless list of specific investments you can make, but nearly all investments fall into one or the other of a handful of categories commonly referred to as asset classes. An asset class is made up of investments with similar characteristics that are also usually governed by the same set of financial regulations. Asset classes. The asset classes that most people are familiar with are as follows. 1. Equities/stocks. 2. Fixed income investments/bonds. 3. Cash or cash equivalents, such as money market funds. There are several other asset classes you may wish to explore investing in at some point, which including the following. 1. Commodities and futures, such as oil or gold. 2. Alternative investments, which include real estate, foreign exchange, forex, and collectibles. 3. Sustainable, responsible, and impactful investments, SRI, with a primary focus on beneficial social or environmental effects. Note T. Generally speaking, alternative investments tend to be less liquid than more traditional asset classes. Stocks, for example, are an extremely liquid asset, whereas a private equity investment may require tying up your investment capital for a minimum period of 5 to 7 years. To jumpstart your investing, check out our free finance classes online. Equity investing. Equity investing, the buying and selling of stocks in publicly traded companies, is what most people probably think of when they hear the word investing, and is a popular investment for beginners. Publicly traded companies offer investors an equity interest in the company through the purchase of stock shares. For example, if shares of Advent Wireless, AWI, are trading at $1.28 per share, then you can buy 100 shares for $128. By selling shares, companies are able to raise capital to help them grow or expand. Stock investors may buy stocks to profit from increases in a stock's price. Sell stocks to profit from a decrease in the stock's price. Buy or sell options on stocks or stock indexes. Stock investors may also seek to profit from receiving stock dividends. Dividends can be looked at sort of like earning interest or a per-share bonus from stocks you own. Dividend.com is an excellent website for researching and comparing stocks that pay dividends. Stocks are traded on exchanges such as the Vancouver Stock Exchange, VSD, or the New York Stock Exchange, NYSE. Exchanges regulate and facilitate the trading of stocks. Fixed income investing for beginners. Fixed income investing refers to investments in debt securities that offer investors fixed-rate interest payments over a specified time frame, the life of the debt security. Debt securities are most commonly referred to simply as bonds. The bond market is one of the largest markets worldwide, thanks in part to the massive amount of debt being carried by most governments. When you purchase a bond, you are providing financing for a company or a government, and in return, you receive a specified interest rate, known as the coupon rate. Interest on bonds is typically paid either semi-annually or annually until you receive the bond's full principal amount back on the bond's specified maturity date. The coupon rate is the yield offered on the bond at the time it is issued. As interest rates fluctuate up or down over the life of a bond, the value of the bond and its actual yield to maturity change. Coupon rates do not change over the life of a bond, but changing interest rates do affect the bond's value and yield. As interest rates rise, bond prices fall. Conversely, as interest rates fall, bond prices rise. For investors who hold bonds to maturity, fluctuating yield to maturity rates during the life of the bond have no practical impact on their investment return. The current yield to maturity rate only comes into play if you are buying or selling a bond in the secondary market sometime prior to its maturity date. The primary appeal of fixed income securities is their relatively low risk. If you're buying bonds issued by a major country, such as the United Kingdom, making the specified return is virtually guaranteed. If you enjoyed this video, don't forget to give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.